Markets rebounded, taking back half of the overall correction yesterday. Futures are soft this morning following lukewarm reports from IBM and Intel. What's next as we cross through the heart of earnings season? I'm Taylor Schrantz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the Morning Call Express. Futures point to a relatively flat open on Wall Street following a couple of interesting days worth of action. Before we get into today's setup, let's take a look at what's occurred over the past 2 days.
Well, we've had a decent snapback. So far, the corrective action, I think, has been muted. And yesterday, finally, we had some power. Tech actually joined the party, giving us a little bit of strength with Apple. But the question is now, with only being about 2 to 2.5% off the highs, can we continue to bounce? Is this a new resumed uptrend, or was this the bounce, and do we take out those Tuesday's lows? So a lot of people are trying to figure out what to do next.
Well, it was really interesting because since Apple actually participated yesterday in some really impressive action, we saw the Qs, all the stocks within that index really led on the tape. But I think let's take a look at the SPX and see how we're setting up for today.
Okay, first things first, you take a quick look at the SPX, you will see that if you remember the Tuesday low came in right around here. That's when we broke below the 50-day. Then we came back above it, had a little bit of a choppy nature, put in a higher low here, and then finally took back the 50-day, and we closed above this recent area. The question is, with the futures off a little bit, with IBM and Intel somewhat disappointing, do we hold the top third of this range and continue to retest this 1398 to 1400 level, or do we turn back lower? So if you look at the Qs, overall also here, Qs had a nice corrective type of action, only about 2.5% off the highs, held the 50-day. So as of now, a lot of people were talking about doomsday. They were talking about 20% move corrective. We're 2% up off the highs.
Right.
If you look at the IBD 50, only 4 of those stocks are below the 50-day. So I think it's been more constructive / healthy for the bulls versus damaging.
Moving along to our sector spotlight, we're actually going to focus on large cap tech. We had some big names reporting: IBM, Intel, Google. Let's take a look at Intel because it had a pretty decent quarter. It's just it sold off that 52-week high.
Yeah, well, we've been seeing a trend where even the stronger stocks, if they rally them into it, it doesn't really matter what the report, they've actually been selling it. And they're talking about margins decreasing in Intel, big deal. They're still above 60%. But you look at the chart here, you will see that stock was near the highs, so trading off after earnings is fine. I think if you want to buy Intel, look to buy around 27.40 at that moving average. I think this somewhat holds. If the market gets a little crazy to the downside, your next big level in Intel is down to 26. So if you sold Intel and you don't hold into the report, I think you could buy back 27.40. If this doesn't hold, this is huge down here.
Moving along to the trenches, we're going to look at the brokers versus the regionals within the financial space. The regionals performed really well in 2011. Not only are they performing well, they're actually growing. We're going to look at names that Stephanie and Kramer have done great on: USB, David Peltier, stocks under 10, HBAM. But before we get into that, let's take a look at the XLF overall, Scott.
Yeah, the XLF has had a decent bounce. If you look here, you take a look at the chart, it looks like some of the others, where this one actually held the 50-day also. It's coming into some resistance, so it's going to be tough to get through. The one thing with the banks, it feels like also JP Morgan had a 2-3-day bounce before the report, so they sold it. Goldman Sachs, decent report, but they sold it. So you need to figure out if more selling comes in. So real quickly, look at this, the chart of Goldman Sachs, which I like to use as a proxy. Here's your inside range. As long as it stays above 115, I think the banks will be okay. Above 120, maybe it gets some strength. And if you look at JP Morgan also, you will see it too is holding this level here. So as long as JP Morgan stays above 42.80, I think that the banks will stay, somewhat supported.
And rounding out the Morning Call Express, Scott, let's take a look at Apple real quick.
Apple was my go-to stock yesterday. Great. This just shows you how you have to time the market. Here, it was a sell when it diverged from the market. Then you had a big down move above the 50-day. Yesterday, you had your red dog reversal. A lot of us got long. Still long. I think we get one more trade above this, 610, and I think 617 is going to be some big resistance short term. Okay,
yeah, you guys did great on that yesterday. Looking at the Twitter feed, in at 575, out at 585 within 10 minutes. It was really impressive. Catch Scott at the end of the day with the rest of the team as we recap the charts on Real Money, Options, Profits, and T3Live.com.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.